the DeFi sector is getting pummeled. We're seeing it fall to 7-month lows in terms of volume, because there's just been this massive drop off in activity in wallets interacting with protocols, in protocols not getting hacked. And so there's a couple of things that are feeding into this drawdown. One is the fact that protocols continue to lose money to hackers, whether that's through maybe more sophisticated North Korean attacks on bridges, or just through really simple re-entrancy attacks that these protocols, these lending and trading markets really should be protected against. Well, they're not, and maybe that's leading to lower consumer confidence. Regardless, it's definitely leading to lower volumes. And it's not just being seen in the Ethereum ecosystem. In Solana too, there's been a drop-off. Now, I think it's worth noting that some protocols are having more success in weathering this storm than others. In Solana, at least, a couple of protocols are achieving higher volumes recently by rolling out new systems such as points that incentivize people to use them. But it's not actually bringing new money into the crypto ecosystem, into DeFi. It's just having the existing money sloshed from one place to the next. So that's not really a sustainable form of growth, because it's not growth at all. So, Will, I'll start with you. What's your take on the DeFi drawdown?
Yeah, the reentrancy attacks and other hacks are definitely a way of losing consumer confidence, as you put it there, Danny, which is probably one of my favorite phrases I've heard, along with DeFi. I mean, this is like the realm of degens, right, where people kind of play to lose money in many instances. They're not too curious about that, but we are seeing a lot of loss in confidence in DeFi right now. I talked to a DeFi founder a few months ago about the secular decline in interest in DeFi, as he put it. Mostly that we're seeing total volume locked, or TVL, the common metric for understanding how many crypto assets and the dollars value of those things are within the DeFi ecosystem. And it's continually dropping over time. I mean, we're not seeing like the steady cliffs, or the cliffs that we saw last year in 2022 with the fall of so many of these ecosystems. We're just seeing money slowly slide out of these things, and hacks and breaks of bridges and stuff like that does take money out a little bit more quickly than necessarily people withdrawing their money. But overall, there is a decline in interest in DeFi, which is leading to a decline in the amount of value within DeFi. We're almost back to that $1 billion market that you mentioned there, which back in, I believe it was early 2020 is when we broke through that $1 billion threshold. That was a huge deal for the DeFi market. The fact that, this many people were there willing to participate in this new leg for Ethereum, right? And it's a huge deal. And now we're kind of going back down. I think this is just symptomatic, however, of the larger market. There's not a lot of interest in protocols. There's not a lot of interest in yield. There's not a lot of interest in the new app or dApp that's being designed. And that's just where we are at in the cycle right now. And that's okay. For right now, there's still people building stuff. A lot of treasuries actually took a good use of their money this last cycle, moving into stable coins or assets that were more robust than the ICO era. I do think that we see this going back up right in the near future, but right now it's definitely a secular decline. Jen?
Okay, I have some things to ponder, and you two can ponder with me or just leave me to question the universe on my own. I think when I read this article, I thought about, first of all, regulatory uncertainty. So we spoke about Binance maybe, on the sidelines waiting to see what happens with regulation in different jurisdictions. I feel like consumers, people who participate in the DeFi ecosystem, maybe people who are intrigued by different aspects of DeFi are also maybe sitting on the sidelines waiting to see what happens with regulation, not only in the US, but abroad as well. DeFi came up in some drafts of MiCA regulation in the EU. We have the Lama-Stillebrand bill here in the US that's looking to define DeFi. And so I think, people who operate in DeFi every day, Danny, like you mentioned, they're probably there and funds are being sloshed around. But I think newcomers might be just watching what's happening and waiting to see what happens from a regulatory perspective. And I don't know. I know in our next story, we're going to talk about VC participation in DeFi. But do you both think that maybe VCs right now who may have bought up tokens, who may have been investing in projects, might be looking at things like AI for the exact reason that consumers might be, like regulatory atmosphere?
Yeah, really quick, I got to fact check myself. I got my numbers confused. So there's $1 billion
I thought you were gonna
around.
Opine with me.
Well, I will in a moment. There's $1 billion of transactional volume, but TVL has dropped from $45 billion to about 43 billion in July. So definitely a significant slide there, but not as significant as I was stating earlier. Are people going to be becoming more interested in this? Is that generally your question? Or VCs becoming more interested in DeFi?
I'm saying that maybe VCs who previously were buying up tokens to participate in DeFi might be paused because of the regulatory atmosphere. And that's probably why we're also not seeing new money come into DeFi, because regulators are kind of looking at DeFi. A bunch of tokens were listed in the SEC lawsuits against Binance and Coinbase. There's bills being looked at in Congress. I don't know. Those are just my thoughts, my very mid-informed thoughts.
I have some thoughts as well, but give it to Danny first, and I'll go.
I have equally mid-informed thoughts. I love that mid-informed, but I'll take a thwack. I'll take a thwack at it anyway. I will say some of these VCs, they're sitting on the sidelines partly because they have to. They agreed to multi-year token lockups, and their valueless tokens are just sitting there inaccessible for the time being as they wait to get their hands on it. And then with that move toward AI, I don't know if that's specifically the reason why we're seeing DeFi in particular losing a lot of volume and a lot of value, but it's certainly a reason why some of the existing venture investors who aren't so eager to jump into risky crypto investments are just as eager to throw their money at risky AI investments, because it's the new bell at the ball, so to speak. It's the hot new thing. And there's a lot more upside that they see right now in betting on this brand new industry as opposed to the one that's associated with FTX and all these blowouts in the last year or so.
Yeah, just to jump in there on what Jen was saying, I think there's still interest in DeFi. I do think that the DeFi market did make a mistake, which the ICO era did as well, which is it's very difficult to launch a token, sustain interest in it. It's very difficult to get the tokenomics right. So a lot of these DeFi protocols became failures because of their early success with these tokens. I still think that there's people who want to invest in this. Paradigm, for instance, just put out a notice this last week stating that they have a bunch of different topics that are interested in investing in the seed stage. And that included some DeFi-esque protocols, mostly dealing with L2s and MEV. So I think a lot of the infrastructure and the underlying stuff is where people are interested in, as opposed to some of the bigger projects like we saw last cycle, like lending protocols or anything of that sort of nature.